Sold at 560.
785 the first, 785 the second, be sure, 785 the third, final time, sold. The third and final time at £910,000, sold. Welcome to the Allsop Prop Chat. This is the series of podcasts designed to cover the interesting aspects of property. We're going to be covering all sections, starting with the commercial auctions, and we'll go through residential, commercial and build-to-rent sections as we progress throughout the year. Well, welcome everybody to the latest edition of the Allsop Prop Chat. This is a podcast to review the June the 15th commercial auction held by Allsops online digitally. Part of a series of podcasts which are beginning to cover a range of commercial and now residential mixed use subjects as part of the Allsop Prop Chat series. So just looking at the broad headlines of yesterday's auction, we raised £61.5 million at auction. That total is increasing as we sit here, I believe, with some sales agreed afterwards, and compares favourably with last year's June auction, which is just short of £23 million on the day, so not quite three times the amount. But we all know what was happening last June, and in summary, not very much. The market, however, has come to life. So Ben, talk us through, what was the biggest lot we sold yesterday?
The biggest lot we sold was in Haywards Heath. It was actually lot 23, and it was a mixed-use parade. It was a lovely looking piece. 4 shops, 10 flats, self-contained, and actually there was some development potential. You could add a mansard level to if you wanted to get some more flats.
3 commercial tenants. KFC was the biggest, wasn't it?
Yeah, KFC took a double unit. So KFC was the biggest commercial tenant, paying roughly around £40,000 per annum. So you had some established tenants there. But actually, the weighting was more on the income, more towards the residential side. But it was that development angle that really captured attention of people. We had 4 bidders bidding on the day, and it was incredibly popular. It eventually sold for £3.303 million, which is 5.3%.
That's quite a racy yield. And was there 5.3% mixed use? That's almost a bit like the one that we sold in Holborn last time. I mean, was there any vacant space, or was it all just that's what the demand was going to pay?
No, it was fully let. So that's what people wanted to pay. But there was this hope value or development angle to increase the floor space and add the flats. And it's quite a high value area.
I mean, Haywards Heath, just south of London, effectively on the commuter line, it's actually quite a nice spot, isn't it?
Yeah, so the development angle really did add something.
Good. I was involved in one of the other big lots was the industrial, actually, and we haven't done a lot of multi-industrials. Everyone knows the market's very hot. This time our client offered us a scheme in Knaresborough, 37,500 feet. It's a scheme that they've put together. We've got 4 tenants, and he assured me that the demand up in Knaresborough is only 4 or 5 miles from Harrogate. So really, if you want sort of secondary space, it's quite hard to find. Dominant tenant here was a builder's merchants, which had a big yard. Again, from my shed shift today, that's quite hard to find. Guided at 2.5 million, that went out the door at 2,860,000, just above 7%. So, you know, it's not a prime estate, it's a decent estate, and really we had, I think, 2 bidders actually fighting it out at the end, about 31 bids on the day of the auction. So that was that. Well, what were you dealing with, Santander's?
Well, we had another 6 sales of the package from the Santander's. I think the standout couple of those would be Pinner and Loughton, both 5-year income with vacant residential uppers, and yield obviously slightly skewed, but sub 4% there. Interestingly, of those sales, 2 were reoffers from our May auction, slightly repriced off the back of sort of feedback after the auction last time round. And interestingly, the prices achieved on the day were slightly ahead and within a whisker of what we were originally guiding back in May. So
they didn't sell in May, the price was brought down and we got back to it.
And what are we now? 6 weeks on from the original May auction. And I think just an example of where pricing is really key in generating that competitive tension to drive on the bidding.
And, you know, depth of market. New buyers pop up 6 weeks later.
Exactly. And reoffers was a bit of a theme throughout. George, I know you had 1 or 2.
Yeah, we had the charity shop in Crawley, actually, lot 67, the charity shop with a convenience store next door. The charity shop rent was big, it was 75,000. We've got 7 flats upstairs. This building was offered in the September auction. It never really got into a stride in September. It didn't sell, and we reviewed it 6 months later with the client. At the time of reviewing it, we just felt the pricing was solid in September at 1.9 million. And interestingly, we presented it. Everything was finalised properly. We got some Matterport plans, so 3D tour of the residential, which is interesting and quite useful actually, because it helped with viewings. That actually sold over 2 million. So the guide was the same as September 1.9, and we got over £2 million for it.
There were a few more pubs as well that we reoffered.
Yeah, we revisited the pub portfolio and sold 2 more. Where were they?
Norwich, which was both from September, reoffers from September.
That was a small hotel and garden, wasn't it?
A few letting rooms, I think 6 letting rooms there. That sold prior to the auction on Friday evening. And then the Alexandra East Finchley, which sold on the day at 680. So it seems that September, obviously, a bit of a tough time. Even though we were selling throughout the first original lockdown, selling quite a few pubs, September, the mindset changed a little bit. But now perhaps a bit more confidence in that sector.
Yeah, no, that's good. Okay. Before we go on to who's buying these, just looking at the boots, I mean, we were blessed with another portfolio again of these lots that have been, all the leases have been re-geared. You might recall that there was a portfolio originally of 300. So mostly 5-year leases. We sold 13 of those. The yield range was extraordinary, 4.6% to 7.5%. It's very hard to predict where the yields end up. I mean, you wouldn't have thought the best yield was from Market Drayton in Shropshire, not the world's most lovely town, but a tiny rent, 14,000, and that's 4.6%. One interesting one, actually, I mean, the Heaton Moor, lovely little suburb just outside Stockport. The building there was quite a modest piece, £26,000 rent on a double unit. This was under offer on private treaty at 440,000. Well, the client clearly thought 440 was quite a decent price, couldn't get the bidder really to get engaged in exchange contracts. It sold yesterday at £525,000. So that's £85,000 more than a private treaty deal was agreed. I have to say, it was the same
20% increase.
20% increase, who really wanted it. Pretty, both units, and quite a modest rent. The biggest of those was the one in Bournemouth, which is 1.4 million, 6%, again for a 5-year lease on a really substantial corner building. So enough of that. Ben, let's have a look under the bonnet. Who was buying yesterday? Any trends?
Yeah, let's look at the buyers. Well, first thing I'd say is just from sentiment, the weight of money out there for commercial property at the moment is extraordinary. They say that households have been saving over the last 12 months, and by the look of our buyers, probably agree. The people are queuing up at the moment. So we saw some interesting buyers yesterday. We saw some tenant buys, and that's probably the most interesting theme to come out of it. We had a
tenants or long leasehold tenants, Ben?
So we'll start with occupational tenants. In fact, it was actually both. But if we look at occupational tenants, we had a Majestic Wine Warehouse in Westbury-on-Trim, which is a suburb of Bristol. Lovely place.
Kind of the Clapham of Bristol, really, isn't it? It's quite smart.
Yeah, so a very smart area. You can imagine Majestic trade really quite well there. But they only had 2 years left on the lease. They had car parking. It's an Art Deco building. It's quite beautiful. But 2 years to go, so quite hard to price. Now, traditionally, what we'd say is buyers are looking for an income stream. So they're looking for income certainty. In this instance, 2 years to go, very hard to price. Well,
also because Majestic was fairly recently sold. So the bricks and mortar business was separated from the subscription business. So a little bit more uncertainty.
Yeah, they've had quite a story as a company over the last few years, but people seem to be keeping up with that. And I think the whole business around it as the Majestic's core business is really quite strong. So 6 buyers bought into that narrative. We had 6 parties bidding against each other yesterday. The tenant ended up buying it in the end. It sold for just over £1 million, £1,032,000, which is 6.4%. Now, 2 years to go. We normally look at yields when we're looking at longer income than 2 years. So let's look at pound per square foot. It's over £300 a square foot, 303. So it's a solid result there, and actually, beautiful building.
Yeah. So the Guildford last auction, we had the turnover rent we talked about at length. That was just over £300 a foot. So that was £300 a foot.
Yeah, it was 380, 385 a foot, wasn't it?
Oh, it was 385. Okay. So Ben, long leasehold tenants. That was East Sheen, yeah.
Yes, it wasn't just occupational tenants we've seen in the room. We've got some special purchasers as well in the form of long leaseholders. What do I mean by that? They are different to occupational tenants. This is the interest, the long leasehold interest is the interest that falls below a freeholder. So you as a long leaseholder will pay a freeholder a rent for a term. You will then benefit from being able to rent your unit out and get a profit rent on that. So we had a portfolio of 5 of these in East Sheen. All of them had around 50 years unexpired on that leasehold interest, and we were selling the freehold. So we saw some of the tenants, the long leaseholders in this instance, when I say tenants, coming to the virtual auction room to purchase. The tenants were looking to bid on all of them, and the tenant ended up buying 2 of them out of that 5. They got outbid on the other 3.
Bang on about Boots, but one of them I think was the Boots that we had 2 auctions ago.
Yep. So lot 31, we sold that in March, in our March auction for £1 million. That was a long leasehold interest, let to Boots. Boots had been in occupation for many years. It was since the 60s actually they'd been in occupation. There was 41 years to go until that lease expired, so reversion back to the freeholder. And in this instance, that long leaseholder has sped up that process by buying the freehold. So they've been able to merge the leasehold and freehold interest, and it gives them greater control of the building going forwards.
And the marriage value is released in the process.
Exactly. So yes, tenants buying at auction, they do it.
Now, Will, I think we can continue this theme and allow you to talk about your favourite alternative sector. Is that right?
The alternative drum beats again. Again, not another podcast can go by without reference to something that's not office, industrial or retail. And this time, it's education, a bit like what we discussed last time. Lot 91 in High Wycombe. And it was a school, 8 years from 2019, a break in 2023, and just shy of 45,000 with RPI reviews. It's quite a low rent, £13.75 a foot. And looking where it is and what it is as a product, clearly a lot of people were seeing a future redevelopment angle there, obviously subject to what the planners would allow. Guided 600, 650. A bid was declined the day before the auction at 650, or the evening before. And by the time the auction started, we had 13 people queued up to have a bid for this one, of which one was the tenant.
And did they end up buying it?
Well, 56 bids later and a price of 781,000. They weren't the bidder. They were outbid by a private, 5.4% achieved. But when you stand back and look at it, it's only £240 a foot, and it's High Wycombe. It's on the train line, and people are buying for the longer term there.
Yeah, it's no hay with teeth there. That's a good price. And again, a good story.
Yeah, and from that, George, probably round off with some retail.
Yeah, okay. So, I mean, we could talk about retail all day, and we tend to pick out 1 or 2 examples. The one we're going to pick out this time was, again, a tricky thing to price, which was a magnificent building in Lincoln. So, good city. Will lives around the corner. His parents do tell me how wonderful it is. Quite a rural catchment, but it is the principal retailing centre for that part of the world. So, Waterstones. The real challenge with this is that Waterstones, again, a tenant had their issues, but they seem to be fine and trading. The break in 2023 isn't going to help it appeal to investors, and the rent of £250,000. Now, it's very hard to work out what the ERV might be if the tenant did enact the break and wish to renegotiate, but we're thinking it would probably go from 250 to something like 150,000 if they chose to do the break, so about 60% of the passing rent. If you analyse the price, and we had 3 bidders on that in the end, 31 bids in total. If you look at the price, there's many ways of cutting it, but it's something like 8.5% on the ERV, £125 a foot overall. But don't forget, it has to be that sort of yield with a break in 2023 coming down the track quite quickly. So there we are. That's a real whistle-stop tour of the auction. £61.5 million sold. We've got another auction 22nd of July, so I expect we'll be recording another podcast after that. Thank you for listening. Please do send out the other requests for podcasts on any sector that Allsop's cover to podcasts@allsop.co.uk. I'd like to say thank you for Ben Hodge joining us from Cornwall.
Thanks, George.
And Will Clough joining us from Wigmore Street.
Enjoy the beach and the barbecue, Hodgie.
And thank you everyone for your time, for listening to us this afternoon.